Very warm welcome to everyone. For those who were with us in the previous session, welcome back. For those of you who are joining us fresh for this first session, my name is Mario Boccucci. I'm the head of the UNREDD Program Secretariat, and the UNREDD program is delighted that we are hosting these 3 consecutive sessions on forest as a solution to multiple crises: food, climate, biodiversity, and COVID-19. So we just finished the first session half an hour ago. We covered forest crimes and governance. In this session, we're going to speak about finance and a transition to sustainable commodity. And then we have our third session starting in 1 hour and a half on evidence-based transformation for food systems. Just a few points to kick off. The first one is that we are moving from an era of negotiations into a decade of implementation. And it has to be an implementation at a scale that we have never seen before. In September last year, the United Nations Secretary General convened a summit on climate. Nature-based solution was endorsed by leaders as a key element of our climate challenge and our climate solution. And within nature-based solution, forest is the most advanced and the biggest of those solutions. The second point is that we really need to scale up ambitions, and that the next 18 months are going to be critical to do that. We have a number of key leadership moments that will allow us to do that, from the IUCN Congress to the United Nations Environmental Assembly to the CBD COP and the Climate COP. And we're already seeing very strong signal from private sector and finance of their commitment to scale up their investment and their interest in forests. So this panel is going to be very important to do that. My third and final consideration is that, of course, the COVID socio-economic recovery process will make it even more important that the solutions that we put in place in the coming years not only respond to job creation, to relaunching the economies, to improving livelihood, but they do this in a way that also meets the climate and development and biodiversity challenges. This is what forests can offer. As the United Nations Program on Forest and Climate, the UNREDD, we've been very proud to be able to work and support more than 60 countries in the past 10 years, to work with private sector, with civil society, with indigenous people, to really make the forest promise a concrete promise, and we look forward to continuing to work with all of you in the next decades to realize that forest promise. With that, enjoy this panel, and Emmeline, back to you.
Thank you, Mario, and hello everyone. Thank you for joining us. I'm Emmeline Cheney. I'm a Regional Advisor on Forest and Climate Change for Asia Pacific at UNEP, and I'll be your moderator today. So in this session, as Mario already said, we'll be discussing how to transition globally towards deforestation-free commodity production from an economic and financial perspective. We'll be hearing from 2 experts who have both spent many years confronting the realities of land use finance. We have Pan, who is Director International at Climate Kick, and Pan comes from a career in impact investing and venture capital in the agri-tech and agri-food sectors. And Ivo Mulder, who is the head of UNEP's Climate Finance Unit and also leads on private sector engagement within the UNREDD program. So I'll moderate a discussion between Pan and Ivo, allowing them to bounce off each other's idea, because you'll see that they come from slightly different perspectives. But I will also would like to give you, the audience, the opportunity to ask them some questions, and also to challenge them if you disagree with what they're saying. So we have colleagues monitoring the chat. Please do engage with it. Also send your questions through the Q&A function on the Wova. You can also upvote questions that you find interesting, you'd like to see covered. we'll be keeping an eye on this, and I'll, whenever we see a good question, I'll try to send it towards Ivo and Pan for answering. I also would like to encourage you to tweet using the hashtags GLF Bonn 2020 and Better with Forests. Okay, so this being done, let's get started. I guess it's always striking to me to note that most of the deforestation occurring today is actually due to the production of 3 agricultural commodities, just 3: beef, palm oil, and soy. And we know that it's possible to produce these commodities without converting new land and putting so much pressure on ecosystems more generally. And this, of course, has been the topic of many discussions in the last few days during this conference. The UNREDD program and UNEP in particular have been looking at the economics of sustainable commodity production to better understand the business case behind it and also the financial incentives that are required to transition towards these new production models. So to set the scene for this session, I'd like to show you a 2-minute video on some of the work we're doing in Costa Rica.
Yo desde que nací vivo aquí y está demasiado de caliente, los rayos de sol están entrando muy profundo.
Offering a wide variety of landscapes and incredible biodiversity, Costa Rica is a pioneer country on forest conservation, sustainable development and climate leadership. Despite having almost 30% of the country in protected areas, unsustainable cattle ranching and agriculture continue to exert pressure on forests.
Mucha de la deforestación que se dio en todo el litoral pacífico, particularmente, ¿verdad?, se dio por la extensión de los cultivos tradicionales y hay mucho también por la ganadería extensiva.
To fight climate change and at the same time improve livelihoods of farmers, the UNREDD program supported the government of Costa Rica to assess the low-carbon productive activities, including livestock, in which collaboration with the private and financial sector is key. One of the cooperatives that improved the environmental performance significantly is Cote Puriscal, thanks to access to finance and capacity development among their cattle farmers.
A la fecha tenemos unas 2.500 hectáreas de reforestación de bosque incentivadas y plantamos en promedio 50.000 árboles al año.
Yo he visto que la gente se ha educado mucho. Yo recuerdo pequeño que en los veranos la gente talaba y apiaba árboles y quemaba. Hacía muchas quemas. Ha sido varios años para acá que no veo eso.
The UNREDD program, the development banking system of Costa Rica, and Cope Puriscal work together to align the condition for accrediting the cooperative so that they can have access to capital at a lower cost for their livestock program.
Muchos de los productores, el sistema bancario no califican, ¿verdad? Realmente el plus no está tanto en la tasa, sino en las condiciones, en la tramitología, en la oportunidad, en el acompañamiento, en la asistencia técnica.
No, okay, thank you very much. So the video talks about our work in Costa Rica, but we also looked at the business case for intercropped coffee production in the Central Islands in Vietnam, the economic potential of land restoration as a way to prevent further soy-driven habitat loss in Cerrado, Brazil, and the cost and benefits of sustainability gains in timber production in Cote d'Ivoire. And these business cases point clearly to the fact that the economic returns of alternative, more sustainable, forest-friendly production models are equivalent to the current models. And of course, they also provide additional benefits in terms of climate resilience, increased biodiversity, and improved soil structure. And these additional environmental benefits can even contribute to the economic profitability of the production models, for instance, by reducing the need for irrigation or agricultural inputs. And this in turn, of course, translates towards improved livelihoods for local producers. So there is a virtuous cycle here to tap into. And although there are plenty of sustainable production models making business sense, they are still far from being the norm. And that's what we'll discuss with our experts. We'll try to understand some of the reasons why and what can be done, especially the financial sector. Before we hear from Ivo and Pan, I'm sure you really want to hear from them. I'd like to quickly test the level of optimism in the virtual room by running a poll. So it should appear on your screen now. I'm hoping you're acquainted with the process. You have to go on slido.com. It can also be slide.do, both work. Please enter the code GLF Bonn 2020 and look for our session, which is called Challenging Conversation, Finance and the Transition to Sustainable Commodity Production. So go to Slido, type the code GLF Bonn 2020 and find our session, which is called Challenging Conversation, Finance and the Transition to Sustainable Commodity Production. Oh, actually, I'm being told, actually, our session is called UNREDD, sorry. So please look for the UNREDD session. We'll see the results live. The question you'll be asked to answer is, how likely is it that we will achieve forest-friendly, sustainable land use on a global scale by 2030, according to you? So let's hope. Let's see how many. Let's give it a bit of time for people to answer. Not seeing. See 20 people have voted already. Thank you. Can we start seeing the results? Yeah. Okay, yes. Majority of you think that this prospect is unlikely, so we have quite a few realists among us, it seems. Of course, changing land use practices on a global scale is no small task. But at the same time, the climate crisis doesn't wait. So please do share your thoughts through the chat and the Q&A, so our experts can engage with it and understand the reasons why you have answered like this. Okay, so let's move on now to our first question. And please, the audience, do remember, I have a couple of questions already, but feel free to send yours in the meantime. But let me first turn to Ivo. So Ivo, if sustainable production models are available and economically feasible, what is preventing the update of these practices according to you?
Yeah, thanks, Emmeline. Just checking if you hear me well. I've unmuted myself. And also welcome and thanks everyone for tuning into this session. I think the economic case for sustainable production is in principle strong. The problem is that in the short term, it is often more profitable to be unsustainable. There are opportunity costs related to creating environmental benefits that are often not being paid for those who are actually creating it. In addition to opportunity costs, there's obviously market volatility as well, and changes in market prices. If you look at soy, for example, the changes in prices is having a relationship with the degree to which deforestation is happening in the Cerrado and the Amazon. The higher the prices, the more profitable it becomes to clear forest and to produce soy. And that's something that is very difficult to control for international organizations, but it is important for us to be aware of. In addition to that, there's obviously supply side and demand side constraints. On the supply side, it is capital intensive to be more sustainable. For example, if you look at palm oil in Indonesia, a major need is to try and replant on existing land. That means clearing existing and aging palm oil plantations, where by planting new palm trees, in the first 3 years, a farmer will not have an income. So that is something that needs to be covered for in order to incentivize that farmer to not clear further forest and thereby further contribute to biodiversity loss and climate change. A major part that UNEP and the UNREDD program are trying to do is to basically cushion the cost and reduce the cost and the risk for those agribusinesses and finance institutions who are willing to move to sustainable commodity production by risk-sharing facilities such as Agri-Free, which was recently capitalized by the Dutch government and Rabobank. Yesterday, we heard that the GEF Council approved a 13 million contribution to that fund as well. There's Green, and there's a few others that we've helped to create as a way to reduce the cost and risk for those financiers and for those agribusinesses who are really wanting to make a switch simply because they've made that commitment or because they're willing to make such a commitment also post the COVID-19 pandemic. From the UNREDD side, we obviously hope that through such initiatives, a proof of concept can be created that will, in the end, hopefully lead to a new business as normal, whereby the sustainable practices over time will become dominant, basically, in the market.
Thanks, Ivo, and thanks for sharing this fresh news from the blended finance front. But now I would like to give an opportunity to Ben to respond. And given your experience and background in this field, what role can we expect from the financial sector to play to support this transition towards sustainable agriculture? Do you agree that blended finance is an option, is a realistic prospect? And do you see other opportunities in that sector? Pan. Sorry, you're muted, Pan. Please unmute yourself.
Thank you, Evelyn, Ivo. Can you hear me okay?
Yes, very well.
Okay. Okay. And thanks to everybody who joined this session. Following on what Ivo just mentioned, the barriers, I think, of course, the financial sector or private capital have a huge role in supporting transition towards sustainable agriculture. And it has to, because it would not be possible without the private sector. However, the current blended finance or public-private financing facilities, while they have a huge role to play to support that transition, has a couple of weaknesses. So first, they tend to be skewed toward debt instruments with guarantees that are more interesting for commercial lenders and banks rather than asset managers and impact investors who are looking for more market-oriented solutions. They take a lot of time to structure, including convening the necessary parties together, and the resulting limitation on the size really preclude them from driving operational changes at scale. I think scalability is one of the key challenges of these blended finance facilities. And also many of them, of course, are for emerging markets. So in addition to investment risk, you have geography, political governance risk, and all of that adds to the difficulty of implementing these facilities. Another hurdle, I think, is the need to provide financing to many small local companies, investors or projects and farmers. And I think even though the blended finance, they tend to engage international organizations, founders, investors, the potential for them to identify and meaningfully engage with enough of these small projects make it very difficult to scale and then really make material change. And also, you know, these facilities can be complicated and costly to administer. So organizations end up spending a lot of OpEx to support actually the infrastructure of this financing. And finally, I would say, despite the de-risking public capital, the return is still too low, given the level of risk for many private sector institutional investors, including impact investors, because of all the risks. So, so that's kind of my, you know, my perspective on the weaknesses. So I think, of course, there's potential, and we should be more realistic in how we expect, how quickly and how much we expect business to change, and the shift is happening. But we also need to create, I think, more market-oriented solutions, financing solutions that can really leverage the existing private sector financial architecture, and that has the potential to achieve market returns. And so, yeah, there are, I think, some innovative examples that's coming to the market, including, for example, result-based financing, driven by the idea that it's more efficient to pay only for actually delivered results than providing capital upfront and then incurring the cost of monitoring and the risk of the project not achieving results. Another area where we've seen innovation is trade finance, as it's a very mature, historically competitive market with a large investor base already. And there's also a mature global architecture in place to match the financing and companies with goods to sell. I think we should also create solutions where we can better leverage the local financial institutions' capacities in implementing and operationalizing these facilities. Typically, these facilities are structured by investors in developed markets. And not really, working with and engaging the local institutions in implementing them. So I think there's, lots of opportunities now to create blended finance facilities that would improve on the current weaknesses.
Thank you so much, Pan. It's very interesting to see the broad area of opportunities indeed that exist in the financial sector go much beyond just blended finance vehicles. But I would like to pick up on one aspect that you mentioned a few times, which is scalability, which is a challenge. I think we all recognize, and after looking at commodity production in a range of different geographies, and in fact we have a question on this also that it's a bit connected. It's about someone from the chat is asking, saying forest-friendly and sustainable land use are in some ways some forms of regenerative agriculture, but how do they address the urgent economical needs of smallholder farmers in developing economies? I think this is so. I don't know, Ivo, if you want to speak to that, the sort of the economics of commodity production in producing countries.
Yeah, maybe I can start, and then Pan can correct me if she disagrees or simply adds to some of these points. I think it is quite easy for me, basically sitting here in Geneva, to talk about smallholder farmers. But if I would be a cocoa farmer myself, planting and growing cocoa on 1 hectare, what I care about is basically making an income for me and my family, basically. And climate change is directly impacting potentially me, but what I'm mostly caring about is the day-to-day reality. So what are the market prices, and how can I have access to finance if international organizations, if financiers and major consumer markets find it so important? What is important for organizations like UNEP, UNREDD program for consumer countries is to then factor in the price the higher price that is required to incentivize smallholder farmers, be it a smallholder who's producing palm oil in Indonesia or a different place, a coffee farmer in Vietnam, or a cocoa smallholder in Ivory Coast, for example, with the technical means to increase production and with the economic incentives that come with protecting those forests that are still adjacent to my plots, for example, and a higher price to ensure that, say, the children can go to school, for example. So I think it is all to do with access to finance and providing the technical assistance for those smallholders. Otherwise, they cannot be expected to basically bear the cost of sustainability imposed by international markets. That's my view.
Thank you, Ivo. I think this is a very important point. Please, colleagues, please, to those listening to us, please do send us questions. Engage with our experts. They're here to respond to you as much as each other. But in the meantime, I will I wanted to ask actually, like, Pan, you know, based on the examples, the few examples I mentioned in my intro, and also that Ivo referred to, how attractive are these projects as potential investments to the private sector? And would you do anything differently?
Yeah, actually, just stepping back to the previous question to add on the smallholder farmer, because that's actually an important point. Ivo's absolutely right that the farmers, you know, farmers are practical people. You must have strong enough economic incentive telling the farmers that, yeah, there's climate impact. Yes, it's urgent, but his first priority is to support his family. And it's also mentioned before about the short term versus long term. Many of the benefits of these sustainable practices, you can only, you know, achieve them over time, and you need the capacity, building technical assistance. And often I think we have this kind of supply side mentality. We go to these farmers and say, well, you know, you should do this, and we give part of the incentive, but not strong enough. And to them, it's just not worth their, you know, time to implement that, because they're looking at very short-term horizons versus long-term. In terms for investors, I think, you know, as I said before, the private sector is pretty, actually, I'm trying to simplify things. It's pretty simple. It's a risk-return equation for investor. Given a level of risk, they're expecting a given level of return. Now, given the objectives of the investors, obviously the returns differ. But, and I think investors are changing their risk calculus right now to incorporate climate risks, which they haven't before, because we're actually seeing material impact on their businesses. However, given, you know, the risks, particularly emerging markets that we talked about, you know, investment, governance, political, implementation, but these are high risks. And I think investors, you know, there's certain risks that they're familiar with, that they feel they can manage and they can accept. But others, they don't feel so comfortable. So for example, I mean, you see large institutional investors buying land, you know, all over the world, in the US, in Brazil, in emerging markets. They're willing to take the risk of, you know, price volatility, even that the land, I mean, essentially the investment thesis is pretty simple: buy the land, hold it, you know, hopefully to sell it at a higher price because land is scarce. But what they are not, right, they're not currently willing to accept is the risk of buying degraded land and then restoring it, foregoing the income that they can get, you know, from productive land. And because they're not familiar with it, they don't know, you know, the return potential. They don't know how that would come out. And I think investors, they don't like unfamiliar things that they know they cannot manage. And so their risk return assessment here is complicated basically by lack of familiarity with land restoration and in generating an appropriate return eventually. So that's where I think public capital could come in paying for ecosystem services, in providing capacity building, technical assistance, and show that it is possible with public capital for you to achieve the level of return that you desire.
Thank you, Pan. I think this notion of risk and how it is perceived in the land use sector by financiers is very important, and is sort of central to what UNREDD intends to do with this notion of proof of concept. So Ivo, do you want to say a bit more about this and how we're hoping to make it less risky for the financial sector to invest?
Yeah, thanks, Emmeline. It's correct that as Pan was saying, well, first of all, I think there is now some level of awareness by governments that public money needs to be, on the one hand, used from a perspective of results-based payments. And I think the UNREDD program and REDD Plus in general is trying to do that, is paying for results achieved against a baseline. Second, what I think at least some governments are starting to wake up as well is that if we want to see a similar shift as what we're seeing in the energy space, you need to provide some degree of risk coverage, as Pan was saying, or reducing the cost either in the pre-investment stage or in the investment stage itself, and both on the debt side and on the equity side, in order to basically provide that carrot that reluctant investors might be willing to take. And from the public finance side, they would say, like, why should I use taxpayers' money to incentivize a private financier? So they are interested, like, how little public money do I need to put on the table to crowd in as much private finance as possible? And on the private finance side, they would say, if that carrot isn't strong enough, they will not bite, basically. So that is a really fine line, and it's a difficult line to sort of assess, because if you provide too much money, you basically provide a free lunch. If you provide too little, then nothing is going to happen. And what we see with some of the blended finance vehicles that we've set up or we've supported, such as the Green Fund, the Tropical Landscape Finance Facility, the Agri-Free Fund, and others, is some proof of concept to try and tease out, like, what does the public-private capital ratio, that blended ratio, need to be in such a way that on the public finance side, they know they're not being taken for a ride, that there is some change in the way production takes place, and that on the private finance side, they know that they're being covered, but not to the extent that you can talk about too high government support that is basically disrupting the market. So that is basically the challenge that we're finding ourselves in. But as Pan indicated, and you as well, Emmeline, there is a certain degree of cost, at least at the moment, that needs to be overcome until the moment that the majority of consumers are willing to pay a higher price. And that is where these vehicles will hopefully provide at least some proof of concept. But I would be interested to see what Pan thinks. I would also be interested to hear what those who are on this session think, whether they agree with my reasoning or whether they have additional thoughts on that as well.
Thank you, Ivo. Actually, just sorry. Go ahead.
No, go ahead.
I think we, following on what Ivo was saying about the risk return expectations, the public-private capital, I think there's a reality we need to accept, which is the private sector profit motive is valid. We need to accept that as stewards of capital, investors have an obligation to make a return given different levels of risk. And we need to accept that there's a legal and fiduciary obligation for investors to preserve that capital and make the best return possible. As I said before, now they have started to change their risk calculus to include risks such as climate biodiversity, which are, I would say, public goods that contribute to their profits, but until now they weren't paying for it, let's say. However, because now we actually see the degradation of ecosystems, climate change, this is now start to impact their investments. So, you can see this increasing efforts to, as companies and investors to disclose their investments in terms of climate risk. And also, I think more investors are accepting the idea that non-financial benefits are a valid component of investment decision making, but still much work need to be done, and that these public good ecosystem services should be properly valued. And the public capital, I know one of the criticism of blended finance that we're subsidizing, let's say, private companies. They should be doing this anyway. Well, I think it is possible to structure facilities that subsidize mostly, let's say, positive public good outcomes, so environmental, social opportunity creation, rather than the financial subsidization. And we see that the EVO's group has piloted quite a few such facilities. So I think we need to just be clear what private capital investors expect and what public capital investors should do. And I think actually public capital should be taking more risk, bearing more risk, rather than saying, well, the private sector should do that on their own. And oftentimes, even now, public capital is even competing or displacing private capital that where they should be just, providing the de-risking.
Thanks, Pan. I think these are really useful reflections. We have a question just now. There are a few that I wanted to ask you about. The role of corporations, about the need to address consumption and paying premiums, and how can we adjust consumption patterns? So if you and how we can put more pressure on large corporations so that they become more sustainable. So if you want to speak to these in your responses, both of you. But I guess the question right now is. Someone in the chat is saying that we hear a lot about microfinance, blended finance. In many supply chains, especially in fisheries and agriculture, there are middlemen who play an important role. Alternative finance mechanisms would exclude these people from the system. Isn't this creating additional drivers for job loss, poverty? How can this be mitigated? So I think the people in the chat really want you to stay with the level of the producer. Can you please respond to that? Pan or Ivo, who wants to start?
Ivo, do you want to go ahead first?
I was just asking if you wanted to go ahead. Yeah, I think it's not an easy question to answer. I think one thing that we need to realize is that any changes that we want to see happening will always lead to changes in the supply chain. So at the moment, because of our globalized nature of the economy, supply chains are very long. I would not be surprised post the COVID-19 pandemic that supply chains would become smaller as more and more people realize that there needs to be a high degree of self-sufficiency. That's only partly answering the questions. It's sort of to say that we live in a constantly changing world, and if we want to move towards more sustainable commodity production systems, we need to look at the added value that each individual, including middlemen, are playing in this. And if it is simply to make use of the arbitrage of price difference between what they can offer a poor farmer and what they can sell it for, then the question is, should that middleman actually be there? Or should there be a shorter supply chain where the actual producer is receiving a higher price or a fair price for what they're actually being produced, even if it would be at the expense of potentially temporary job losses for middlemen. So what I'm basically saying is that there needs to be an actual added value of that middleman being provided, and if there isn't there, then I'm not sure we should take that potential job loss into account, in my view.
Thank you. You raised a, again, very good point, is that the agri-food value chain is very long. So inevitably, from input from farmers all the way, let's say, to production, to manufacturing of the food. I mean, there's logistics, to retail, to consumer. And I think in developing world, for the three commodity you mentioned, soy, palm oil, beef, they're mostly producing emerging markets. What's happening is that the farmer seems to bear most of the risk, but the least of the profits. So the value that's incurred is really, disproportionately taken by others. Often, the food companies, it could be middlemen, and that's also why farmers are not willing to invest, because they're taking the biggest risk while getting, the least of the value. So I think blended finance could be structured so that the value, both of the risk and the value sharing along the value chain could be more evenly distributed. This way, you can still keep an intermediary, because I can understand it's difficult to deal with many small farmers. So traders have to deal with cooperatives and middlemen. But I think if the value created and the risk could be better distributed and then shared by everybody, I think it benefits everyone. And then on the consumer side, just to add, again, I think it's going to be an evolution. I think the millennials seem to be a lot more sustainability minded than the older generations. But I think most consumers still buy things with the price being the biggest determinant. So that's why it's difficult to place a premium on the consumer.
Thanks, Pan. Sorry to interrupt you earlier. I just saw a question that I think would be great for you to answer. It's about corporate liability, and it's asking about how important is parent company liability of the subsidiaries operating in developing countries in terms of shifting private investments towards sustainability, sustainable commodity production. And also we have another question. I'll take it later. Let's answer this one, and then I have more coming. But this is good. Thank you. Please do keep sending your questions. We love them.
Well, this is a tricky question because but more broadly, I think sometimes we expect too much what the corporation should do. I mean, there was the article in the FT where Warren Buffett said that there are things that government regulation need to play from a policy perspective, and companies should not be moral arbitrators, of things. I think on the one hand, we see a trend of all these food manufacturers wanting to make their supply chain more sustainable, such as the Unilever, Danone. So they are trying to do that. But I think there's more room for government policy, for regulation, especially in emerging markets, because these things, are, including even in the EU. We see the EU taxonomy on sustainable finance coming out, emission targets. These things, yes, the market could do it, but they're not going to do it very well, given their profit motive and how the market works. And I think governments, should play a much bigger role in trying to get more environmental and socially positive outcomes. So to give an example that may be more controversial, I was intimately involved in the carbon markets, ran a carbon fund. And from what I saw, it's far more efficient to just implement a carbon tax, actually. because even though it was a great idea and it proved that, you know, investors are willing to pay for environmental assets, you know, if the return was appropriate, the system was so complex and so bureaucratic, you know, a global market could not be created. And all the financial participants, from banks to, you know, managers to everybody, was in the market. So I saw a lot of exploitation actually of the carbon market, even though intention behind it was good. And actually a carbon tax would be much more efficient, but it's politically not popular to do that. So
indeed,
that's my personal opinion. So I'm not representing, you know, any group. So
yes, no, well, there is a good question that came up for you too. Actually, is whether incorporating climate risk into risk-return calculation of the private sector, is that sufficient to move towards sustainable agriculture, or do you think more regulation is needed? Ivo, do you want to start? And I know Pan has some position on this, but let's give Ivo a chance to speak.
Yeah, I think it's an excellent question. I think it's a question that perhaps in the agricultural sector and in the forestry sector it is increasingly being asked, is how to deal and price the climate risk. I would hope that the person who's asked it, and also others on the call, are aware of what's called the Task Force on Climate-Related Financial Disclosure, TCFD, which was hosted by the Financial Stability Board, which basically said climate change is increasingly going to be a risk for businesses, and there needs to be a systematic, rules-based system for disclosing climate risk. I would believe that if climate risk is better reflected in, and that also relates to deforestation, of course, is that is better reflected in agricultural production systems and value chains, that at least gradually would shift the focus of investors to those companies that have best dealt with factoring in climate risk. And that is something, at least the physical risk, so the fact that there can be droughts, floods, and other forms of physical climate risk. And on the other hand, reputational risk related to dealing with businesses with unethical behavior, that will increasingly be a dominating factor for those investors who are failing to address it. So yes, the answer to is yes, if climate risk is better embedded, it will at least have some beneficial form in moving towards sustainable production systems. What maybe just a final point, what I'm hoping for, and this is also what Mario kicked us off on, there have been a lot of negotiations at the global level. And while negotiations and discussions are still necessary, we need to be in this decade of action. So the sooner that we can embed climate risk, the sooner that we can provide the kinds of incentives, whether it's from a stick, whether it's from a carrot, to the sooner that the food and agricultural system would move towards more sustainable production systems.
Pan, let's hear from you, and then I have one last question for you guys, because believe it or not, we're nearly running out of time. But let me give Pan a chance to answer on regulation.
So thank you, Amlan and Ivo. I absolutely agree at this point that climate risk should be incorporated. But I think again here, you know, we're seeing a gradual shift, because there has to be consequences of disclosing risk. What we see now is a lot of I guess you start with disclosure. So we've seen some examples of the TCFD, the Task Force on Climate-Related Financial Disclosure framework being applied. It's very qualitative. You know, companies would disclose their risk, but what can they do about it? Or what should investors expect them to do? Because just disclosing it is not very meaningful. So I think there has to be consequences or a way to disclose the risk, and then a follow-up to say, okay, we know this is, here's how we're going to address it because of it. I think that would come. And actually, just to mention, there's climate risk, but there's actually broader nature-related risks. And we know that there's an initiative being worked on by the Natural Capital Alliance on what's called a task force on nature-related financial risk disclosure. So it's a broader set of nature-related risks than just climate. Of course, such as biodiversity, degradation of ecosystems that will contribute to climate, but it's not so explicitly climate risk, which tend to be, at least now, very much focused on the energy sector. And I think that's definitely going to happen. Another thing is we need standardized frameworks and metrics across regions. So I think some of these initiatives, like the TCFD, is trying to do that. But the more harmonized they are, these risks, the more investors and consumers can judge for themselves how companies do across regions.
Thank you. Actually, I think we might have time for 2 questions, but so I think Pan, you mentioned some of the innovations you've seen in the field, and perhaps you'll want to go over them briefly again. But Ivo, I wanted to give you a chance. What excites you in this field right now? Like what is giving you reasons to hope? Remembering that we have some realists in the room, so let's be.
What's causing me? I mean, I think while there's obviously, in a way, a relatively grim picture at the moment with the massive economic impact that the corona pandemic is causing and the loss of human life, I think. At least mentally, I think and hope, and that's causing me some cause for hope, is that it gives people a reason to pause and say, like, what is my place and what is it that I can do as an individual, as a citizen, as a business executive, as a politician or policymaker, to do things differently after this corona pandemic is at least subsiding a little bit. I don't think it will be away from one day to the next, but my hope is that the nature on the global agenda, the nature protection in people's mind is going to play a bigger role after the corona pandemic has subsided, including what it means for individual consumption behavior. So that's me talking from a personal perspective and obviously also from a professional perspective, but that is what is causing me some hope as well. And we live on hope.
Well, we live on hope and faith, I would say. I agree with Ivo. Actually, despite the current crisis and the very tragic loss of life, I think we have an opportunity now, because in both emerging and developed world, to link, to implement practices, changing business models, in training, capacity building, to educate, from farmers all the way to consumers to be more sustainable, whether at the farm level, whether when they are purchasing products and fruits and vegetables in the market. And I think perhaps this pandemic has made people, well, a couple of things. First, to be more aware of what's really important. Actually, ironically, the agri-food system hasn't been impacted as much as, such as travel, because you need to eat. And we know that in 30 years, we'll be feeding 2.5 billion more people with climate change impact. So essentially, we'll have to feed more with less. And the current business as usual ways, even if they continue as they are, is not going to produce enough. So we need innovation. We need more sustainable solutions. Otherwise, no one will win. And this is not going to happen in 100 years. This is right now. And I think people maybe perhaps being locked up at their home has also more time to reflect, spend more time with their families and on their own. And hopefully that gives people time to realize what's really important and their individual role in contributing to that. That's what I hope.
Thank you. Well, thank you. I think it was beautifully said. Thank you, Pan. Thank you, Ivo, for this lively discussion. Many thanks to everyone listening to us and participating through the chat. So please that's all the time we have today. But please do not hesitate to reach out if you have follow-up questions, or we can reach out to us on social media via UNREDD, but also through the community forum of the learning track on finance and value chains. We'd really like to hear from you. So I'll give Ivo and Pan a chance to say just one goodbye with one last statement, perhaps to leave or advice or joke to share with.
Yeah, so I mean, mostly a thank you for everyone who's tuned in. Great questions also. Thanks for Emmeline and Pan and good moderation, good questions. Maybe a final position or hope or statement is that what I would like is that we can move or create a kind of a standard that both farmers, input companies, traders and financiers, as well as governments can rally behind, that better embed the necessity to decouple deforestation from commodity production, which, as Emmeline said, is the prime driver of deforestation around the globe, obviously different commodities. So that as part of at least UNEP's mantra of building back better, we have something concrete that we can work towards. So basically trying to avoid the negative impact and better reward the positive impact to a greater degree than what has been done to date, because as Pen was saying, that carrot simply hasn't been big enough. So that's what I hope.
Make the carrot bigger, okay? And Pan?
Well, I think I'm actually quite hopeful, to see that groups like Ivo's group at UNEP is actively engaging with the private sector, and with limited resource, able to achieve so much and launch, really innovative facilities. And I'm very impressed by, how a small group or few individuals, what kind of change they can make. And I guess I will end it with a quote that I recently read, that Tolstoy always said that everyone wants to change the world except themselves. So I think, but there are things we can do as individuals to be better.
Thank you so much, Pan, and thanks everyone. Have a great day, and please stay tuned in because there will be one more discussion moderated by the UN program in about half an hour. Thank you very much.
Thank you, Emmeline. Have a nice weekend.
Thanks, Emmeline. Thanks, Ben. Thanks, everyone.
Bye-bye. Bye-bye.